Now you can learn from me in your preferred language. Just click on settings, click on the audio track and choose either from English or Hindi. Hey folks, Rachana Ranade here and I welcome you all to a very important video. Why? Because Nifty is just hitting higher highs, and at this point in time you have to understand as to how one can manage their positions. Basically, one should be able to understand what could be the right time to book profits. And why am I telling you this? Because I'm sure that every one of you might be sitting in good... Okay, not everyone. Many of you might be sitting in good... Okay, I believe that many of you might be sitting in good profits in at least some stocks. Okay. Now, if that be so, we have to understand as to how could we lock our profits, and for that, we have to have an amazing discussion. So keep on watching the video till the end. But before that, let me thank Reena and I Special for their wonderful comments. So now let's take the example of Nifty so that I can explain my point in a better way. So have a look at this. So assume that the last leg of rally, if we were to understand how much gains Nifty has given from the lowest point to the highest point, Nifty has given almost 14 or 15% returns in what? Last barely a little bit more than 3.5 months. So is it a possibility that majority of you may be sitting on roughly around 15% returns, at least at an index level returns I'm talking about? But then you might be like, Rachana, this is too much, right? You are assuming that we invested at the lowest point and you are saying now we might be at the highest point. This is too much. So let's not take this scenario. I know this is highly unrealistic. Let's take an example wherein you might have done an SIP for the last 2 years or so. Okay, so for that, let me zoom out the chart a little bit. So here, assume, let us say we started our SIP from August 21 and from August 21 to July 23. So 2 years time frame we are discussing about, right? So markets have been typically in this range from 16,000 went up. So now what am I assuming? You invested at this level also, at this level also, at this. It's an SIP, right? So every single month you have been investing at various levels. So somewhere from this, so I'm going to just ignore this lowest point, let us say, and somewhere around these points on a higher side, or let me just maybe bring it down somewhere here, you have invested at various levels. I'm taking an overall view, right? Of course, one may say that, okay, this is also one level where I've invested, but that's just one SIP out of all the SIPs. So let us take a little bit different picture, right? Let's say this is the average. Still, what will be your average price considering these lows and considering these highs? Still, you would have an overall average price. So that comes to roughly this level. Okay, so somewhere around this candle. So now let's understand that from this level, how much would one be in profit? So from here, the point that we calculated, till here, the highest point, still someone would be sitting on a profit at an index level. If someone might have done an SIP in Nifty, that person may have been in a profit of around 14%. Now the big question is, how can we trail this stop loss is what we are going to understand in the next section of the video. Well, before I move on to the 3 methods that I'm going to discuss today, or maybe one bonus method also I can give you, wherein you can decide as to how can you trail your stop losses. Before I actually go on to the topic, let me obviously tell you, need not give this disclosure every single time orally, but still, this is nowhere close to an advice of booking profits or whatever. You have to take the final decision. I'm here to educate you that on what basis can you decide, or what could be the levels. How can you decide for yourself? Are there certain indicators that can be used to decide the levels or not, is what we're going to check in today's video. So let's start with the levels, with the indicators one by one. So the very first one could be a super trend. So for that, I'm just checking out super trend. I'm going to click here. So as per this one, the green super trend shows that yes, it's a bullish momentum, and if it's a bullish momentum, it's an uptrend. Why to book losses? It says trend is your friend, so enjoy the ride. But if the market closes below this level, it means that the bullish trend may be over. So as per the super trend indicator, one may consider booking a profit. I am saying not booking a loss, because you are already sitting on 13% as per our example, that if you have done an SIP for last 2 years, then we discussed what could be your average price and all that, right? So anyways, if you are with a 13% profit, then you may consider booking it or closing off the position at 19,031, because this is where we may say that the trend could reverse. Acha, number one. But before I talk or go into a little bit more details, you have to understand that if you are considering holding on this mutual fund for like 5 years, 10 years, this is invalid point for you. If you feel that okay, I want to book the profits, then at what time is what we are discussing right now. Okay, fair enough. So now let's understand, should you be booking exactly at this level? So generally what we say is that at index level you may take the level here maybe 2%, 1 or 2%. Let's say chalo, even if I say 1% roughly below, because sometimes what happens is that the market may touch your stop loss level and from there it can reverse. Okay, so to avoid such a situation, what we are saying, maybe 1% below your stop loss level. So somewhere around 18,800 could be the level as per what? As per this method of super trend. This is where you may consider exiting the position. What could be the second one? Second one could be checking an indicator for moving average. So what I'm going to do, I'm going to just quickly take you through the 20 days moving average. So here whatever moving average I have is 9, so let me take it to 20 days moving average. So now if you see here, one person could have easily ridden on this uptrend, because not even one time since the last whatever 3 months roughly, it has not closed. See, the wick has gone here below 20 days moving average, but it has not really gone, it has not closed below the 20-day moving average. So as far you are above this 20-day moving average, uptrend is absolutely intact. Why to book profits? Why should we be in a hurry to book profits? But wait, this could be a level where one may say that okay, enough, now this is caution, I may want to exit my position here. But why exactly at a 20-day moving average? Again, I'm saying maybe a percentage lower than this could be considered. So if I take 1% lower than this, it again comes to around same level, 18,800 level only. See, I'm ignoring few points here and there, right? So as per first method, which was that? First method was as per the super trend method. 18,800 is what one can, just drill into the mind. Second, we checked about 20 days moving average. Till then, I'm comfortable. You want one more indicator? Chalo, we'll take one more indicator. I've never discussed this one on the channel till date. That's called as a Parabolic SAR. Okay. So if I were to use this indicator, let me first remove the 20 days moving average. Now here, if I were to zoom in, you will see certain dots. Okay. Now, as per this Parabolic SAR indicator, it says that if you are above the dots, you are in an uptrend. But if the dots appear above the candle here, then it means that caution, one may exit the position. So in that case, if anyone would have gone through the Parabolic SAR, then number 1, 2 and 3 times it gave an exit call, but immediately it has also given an entry call. What is the current scenario? Current scenario is we are way above the Parabolic SAR dots. This is where the last dot is. Again, same thing. From here also, would we want to book immediately? No. So again, let us go roughly 1%. And again, the level is 18,800 only. Okay, so fantastic. All three methods that we discussed right now were indicating somewhere close to 18,800. This is where one may consider exiting. But again, as I said, this is not an advice. And one bonus method if you want, I can tell you, always remember this. It's very, very difficult to quit at the exact highest point. Now, if market, assuming this is the top that it has made, let's take roughly around, you have to forget about the top 2%, 3%. You're never going to get that. So if I say at an index level, if I were to forego around 3%, that is still coming to around 18,900 level. So I hope you have understood. As far as booking your ultimate position is concerned, I showed you 3 methods, and based on all 3 and even one more bonus method, that was ad hoc method, roughly using all 4 methods, final level which was coming was around 18,800. Well, before I wrap up the video, let me tell you that the last method that I used, ad hoc, forget about last 3% and so. For stocks, what you may say, see, 3% move in a stock could be possible in a single day also. So for stocks, maybe you would want to give up on roughly around 4 to 5% from the all-time high. That could be possible if you're sitting on gains, huge gains of 12%, 15% plus, right? So I hope you enjoyed this video. If you did find some value, then don't forget to share it with your friends. Don't forget to smash this like button as well. And if you want to learn more about technical analysis, you can click here. Till then, take care. Jai Hind and bye-bye.